Hey, I got something to say. I'm just so sick of hearing everyone complain. I know it's tough and I know there's pain, but hitting bottom is the only way to change. So I'll keep hustling.
Welcome to CryptoEMC, everybody. My name is Rudo, also known as the chart artist, and with me in crime, Fibonacci Lee. How are you doing, my friend?
I'm doing good. And you? How about your weekend?
My weekend is fun. So let's quickly jump into Bitcoin while we talk about our weekends. Everybody that might be in panic stations should be reminded of our bullish thesis. Why is this bullish thesis so important? Well, today we're definitely going to be taking this bullish thesis and applying some of the important notes. What is technical analysis? What is our point and figure showing us? Are we trending or are we consolidating here at the bottoms? Important things. Wyckoff accumulation. We sent out stuff regarding that. And then some strategies that we need to do. What is going to happen if we lose these levels? What should we be thinking about, planning and doing? And then lots more as well. Lee. So in argument of this, we started talking about converting our YouTube channel into a cooking channel should we lose our bullish thesis. Subsequently, tried cooking over the weekend, burnt my fingers. Let's maybe stick to crypto for now. What do you think?
Yeah, you can't even trade now, you told me. You can't even click on the mouse now. Anyway.
Today I can.
You can. No, not yet. We're not done with crypto.
No, we're not done with crypto, and you should not be either. But there's big warning signs, and let's dive into that. All right, guys. And while we do that, please hit that like and subscribe button, support the channel. We greatly appreciate each and every one of you guys. Okay, so Bitcoin bullish thesis, simple put. We're looking for a trend to establish. And why do we do that? Well, trends is how we predict probabilities. Doesn't mean we predict guarantees. We predict probabilities. What is the probability of this run continuing or the probability of us breaking the long-term established trend of Bitcoin just going up? Now, what do I mean by that? Well, if we look at Bitcoin's all-time high, the first one in 2011, you can see that from the all-time high to the all-time low, we put a normal fib retracement on it. Once we drive past the all-time high again, that's what Bitcoin does. It goes through a halving cycle, and then normally we leave the previous trading range. We create a price discovery impulse. We come and test the 1618 fib extension, and the rest is history. We go up, we create a new all-time high, low. I put on the same fib level as I would have done on the previous run. What do? We get this price discovery impulse, consolidate above the 1618 extension, and this happens after the second halving. And from that point onwards, we start going through the emotional cycle, belief, thrill, euphoria. Now, what happened now is we had our consolidation, the high, low, 1618 fib, drawn in there again. We had the price discovery impulse, and we've been stuck in optimism. So bullish thesis at this stage is being tested. The trend's your friend until it lasts forever. Before we dive into this a little bit further, guys, hit the like, hit the subscribe. Please support the channel. Now, guys, all the said, or frenemies. Remember, we use this term very importantly. There's a reason why we're frenemies. We're trading against each other. Lee, technical analysis. I've been thinking about this, and I actually come up with an idea how I can describe technical analysis for anybody that is new, to just give a little bit of context of what it is and what it is that we do within this. So basically, Lee's my friend. And if I now go back and I study any and everything Lee did from birth up till now, would you guys agree with me in the chat? And I'm opening up the chat here. I want to have a look at your guys' chat. Would you guys agree with me in the chat that if I were to study Lee's every movement since his birth up until now, I would, with great accuracy, no guarantee or a high probability, be able to predict where Lee's going to be next week, Tuesday, 4 p.m.? Wouldn't you agree with me? Give me a 999 if you do. Now, Lee, where will you be next week, Tuesday at 2 p.m.?
Oh, it's not difficult to guess, right? We start at 1:30 this CryptoEMC episode. So at 2, I believe I'll be in front of the camera.
Okay, yes. So if I'm a betting man and I'm betting on Lee's actions, next week 2 p.m. I'll see if
unless
999.
unless you bet too big and they say I'm sick and I'm not here anymore.
Yeah, or Lee quits. Me and Lee, we get a catastrophic black swan event. We fight to a point where we say we call it quits. Or internet switches off. Or there's so many additional things. So if I want to build a good technical analysis base, what do I need to do? I can't just look at Lee's actions. I need to look externally as well. Does he service his vehicle? Will he be able to get to his office? Does he pay his electric bill? All these additional things can bring additional probabilities in that we need to account for. That's what technical analysis tries and does. Oh, my tenses are struggling today. For that reason. So if we can do this, I can then with great certainty try and analyze what external events might prohibit Lee from being on this call next week, Tuesday. Okay, Lee. So with that being said, let's flip back to the bullish thesis. Now, why did we go through this? I want to ask each and every one of you guys. Well, it gives you an idea of how risk management works. Lee, if I can not guarantee where you're going to be next week, Tuesday, do you think I'm going to put my life savings and everything into that bet?
Hopefully not.
Well, foolish people will. And that's the important thing. Because if you understand technical analysis and you think that that's all that it needs to be, you probably will be doing that because we don't want to call ourselves gamblers. For some reason, we hate that term, I'm a gambler. But we are gamblers. We just get to decide the terms. And we get to be the casino rather than the guy playing it. That's the magic. So let's be a little bit of casino today, Lee. And so we've got a bullish thesis, and at this stage, the thesis is being tested. One thing I just want to point out to everybody is that when we look at the point and figure, and the point and figure is now currently in a price discovery to the downside. And what I like to see is when we move up, we start creating these impulses at a 45-degree angle, and that's the trends that we're looking at. Now, please bear with me. These lines are truncated due to the data from TradingView being truncated. So they will get skewed over time and period. But where we are at current time, it's always going to be 45. So Lee, looking at this, would you want to call this a trend to the upside or more consolidation of sorts?
It started from a little bit of uptrend for me. And yeah, I'm patiently waiting to see higher highs and higher lows for me. I'm pretty confident, or not confident. I pretty, like the 618 area, and I do believe that it happened in the past as well. There will be kind of reaction when price come back to 618. There's no sign of bottom yet, right? There's clearly no sign of bottom, but yeah.
But let's leave that 618 out of the picture for a little bit now. So if we I'm looking at this and I'm saying that it is definitely breaking the downwards trend, but it might just be consolidating in a lateral pattern, similar to what we had over here, where it gives me hope, but there's no clear impulse, clear clean wave. So that's kind of what I'm looking at. And I just want to maybe just flip back to this. Lee, looking at the DXY at this stage, it's so premature to actually say that this is a top. Wouldn't you agree? So we're currently sitting
it's kind of losing its momentum a little bit.
That is definitely sure. You can actually see this here, guys. We made a higher high, and the first time around, we've made a considerable pivot down with that area over here. So it's showing us that it's doing that. Now, when last did we have this type of bullish divergence playing out? If we can zoom out, we don't need to go and look so far back into Bitcoin even. And you can see there's a scenario of that playing out. So things are looking really rosy, makes a higher high, and RSI is not conforming to that, showing us that our trend is basically overextended. It doesn't mean that it can do it 3 more times, 4 more times for that matter, until eventually you get the trend established. Higher high, lower high with a lower high supporting the RSI. And that's normally then when the reversal starts kicking in. So with that said, this DXY is not ready to do that maybe just yet, but we need to be patient. One thing that you can do if you're new to trading and you just want to keep tabs on it You can track it with the momentum line. Remember, this is not really a trend line. It's a momentum line. Once we start losing these momentums, we'll probably start falling in between these wedges. And at some stage then, we're going to pick up whether this is a complete reversal or whether we're going to consolidate in a lateral range here for months. We don't know that just yet. Leon, just another thing I just want to bring out for everybody is the Bitcoin dominance. So we're going to be talking exit strategy. We're going to be talking what to do with Bitcoin. If the bullish thesis fails, if the bullish thesis holds, because there's a lot more information out there that we need to consider in regards to our holdings. So that said, what it is showing us at this stage is whenever there's positivity, the positivity is sucking the alts dry. And when there's negativity, the negativity is sucking the alts dry as well, because the dominance is currently going up as Bitcoin is trending down. So that's bad for alts in general. So we're going to have to make some tough decisions on those alts as well. Should it be wiser to stable up? Should it be wiser to shift them around, especially if you're in horribly performing alts? And that's something that this chart's going to want to create these questions. Now we're going to look at a couple of alts before we do that. So last thing that I want to talk to you guys about is the Wyckoff accumulation. I send it out as a tweet as well. So go on to Twitter, follow me and Lee. We're on Twitter as well. We share a lot of snippets and small little intels over the weekends. YouTube, we're only here for this allotted amount of time, but there we can, as we scan the markets, we share out information. So go check us out there. Our Twitter handles are also in our name descriptions here. Chart artist and Fibonacci Lee. So I'm going to bring this back, Lee. This is my accumulation chart. And the idea is that my hope was that this weekly candle was going to close green. So if that was a green candle, this volume would have been considered breakout volume, bullish volume. Would you agree there?
Yeah, totally. But did we close the green?
No, we didn't. Now the BLX is a day behind. Doesn't have hourly and in any of those details. But this was the tweet. So let's have a look at the BLX and see where it's at now. So this is the analysis done on the weekly, because I think that this is the correct time frame for this, because we started in February 2021. It's a year later and a year and a bit later. So almost a year and a half later. So it's just a weekly analysis. But if we go on to the daily, what is it that we see? Let's see if we can find some evidence of positivity there. Now, what one would expect is, and this is the important thing for me, is when we look at this lateral channel forming, there's the upper end of the range. It's called creek within Wyckoff terms. And there's the bottom end of the range. It's called the ice. You don't want to see the ice broken, because then the thing falls down quite hard. And the argument was that the weekly, if we move back to the weekly, didn't close below it. So that is good sign. Wouldn't you agree now? So a thermal shakeout means that we left the range for a short period of time. In a weekly scale, 2-3 days being out of the range is a short period of time, creating all sorts of panic and negativity. Now, this is the negativity we were discussing a little bit earlier. I phoned Lee this morning and I said to him, buddy, I got my first little bit of hate mail again over the weekend, which was an amazing relief. And the reality with these hate mails is, and Lee, we said this many times, when everybody agrees with you, you kind of need to worry about your strategy, especially if the market's not trending. But when there's people with opposing theories and they're rude, it kind of then sets the tone that they're in agony. They've made some decisions based on not based on what's the word I'm looking for, their primal instincts. So they sold to reduce pain. And now they're angry and they want to lash out and they want to be negative about these things. So it's fine. We love that. We understand that that comes from, and it's a brilliant tool that we all can use. So the more negativity there is, the better the chances we have for this analysis to hold. Okay, so with that said, Lee, last little thing I want to point out to you is, so on the weekly, this does look good. On the daily, though, we have not yet done anything to say that we're ready to go up. But just yet. Yeah. A lot of time that can come through. So what do we want to do before we then look at these higher targets is first plan what our exit strategy needs to be. Now, why do I want to talk about exit strategy? And I should have just brought the screen back while I was talking about this. This area here is not giving me a reason to believe that we're going to go above this range, because this is kind of on the daily, the range where we would want to see a little bit of positivity. Get above this area over here, and all's dandy and fine with Bitcoin again. So we're still quite far off from that. Now, what I want to bring forward is just simple evidence. If we look at the Fed, now, at this stage, currently what it's saying is there's an 82% chance, the betting people, they've got an 82% chance that there's going to be a rate hike of 75 to 100 basis points. So it's on the interest that's currently out there, 0.75% to 1%. So that's crazy high with an 82% probability. Now, as the month goes, because this is only going to be established on the 15th of June, this bar might come down, which means that the probability for this thing gets reduced. If it goes up, the probability that that's going to happen gets crazier. Now, why are we talking about this? Now, the important thing that I want you guys to take away from this is the external things that can impact our crypto. Like I just said to Lee, I know where Lee's going to be, but if I don't know whether his vehicle can break at any time. His office can burn down tonight, and then there's no YouTube. There's a lot of things that can happen externally, and we have to plan for these things. Now, what normally
say a little bit positive about me, please? Don't jinx it.
Okay. Lee just does not want to go. Simple as that. Let's leave it at that. Lee just doesn't want to go. Nothing's broken. Nothing's going wrong. In any
you're
case,
supposed to be my friend. You said like my car's gonna break down, my office is gonna be burned. I mean, what else now?
Okay, no. Lee just won an overseas holiday for him and his family. And he's gone. He's taking that vacation on a secluded island, food, drinks on the house, everything. Why would you want to be here? Okay, so there's the positivity. So with that being said, quantitative easing, normally what it does to the stock market is creates a lot of positivity, because the Fed is actually printing money and helping the economy along, buying up bond, buying up all these debts, investing their own fiat back into their own country. Simplest way to try and put it in. That's good. People get confident. Everything is fine and dandy. We're all making money. But when the Fed is saying it wants to do quantitative tightening, which is now happening the 1st of June. 1st of June or 1st of July. Just need to check the dates there. What they're doing, they're basically doing it in reverse. So they're going to start offloading all the debt and the bonds and the stuff that they've bought. So they're indirectly getting out of their own country, selling their own stock back to the citizens. Now, what that normally does is it creates a lot of negativity within the stock markets. This is not the stream for that, but you can historically go and check that and see that when that happens, how the stock market reacts historically. Off the back of the fact that we've had the highest interest rate hike in what probably be 20, 30 years. So there's a lot of worry and that is seen in the stock market. That is that holiday that we cannot plan for, that Lee just wins out of the blue. So if this happens and these things start taking a role, that might mean that we're in for a longer term negativity, irrespective of how we feel about the adoption of Bitcoin or anything else, because if people lose confidence, these type of analysis will fail. There is absolutely no peg out there holding the 1618 extension. It's merely a marker in the emotions of people that normally when it gets there, it's a good deal. But if nobody's got money, a good deal cannot be bought, period. Okay, so that's my little piece on that. So you guys need to think about it. And now it brings us over to Lee. Lee is looking at, I'm going to bring up your screen there, my friend. Lee is looking at how we're going to go about exiting. What would be the game plan to reduce some risk? Because if all these things plays out, I would be more comfortable reducing some risk. And then if I'm wrong, how can I buy back? So Lee, what are we looking at there, my friend?
So I pull out this historically chart of BTC. And I was always pointed out the importance of this 618 level, right? I never said that we're gonna find the bottom at this kind of level. But the between 618 and 786 has always been an area for institutions to load more and to buy for long term. So let's see what happened in the past when the price action did touch the 618. And I do had a strategy before by trading the 618 level on a smaller time frame. I also noticed that it happened also quite a lot on a smaller time frame. So basically the idea is once you have a low to a local high, price will always pull back to 618. And once it touched the 618, remember I never said it can be the bottom. As you can see on the price action here, the bottom is way below the 618. But notice what happened here. First time it wicked to 618, and we had a reaction
Can you
back.
maybe expand your screen a little wider? Sorry there, buddy. It's really hard to.
So like
Thanks,
this.
my friend. Yes,
So the
that's
first
nice.
day on the 16th of Jan, when we went to the 618, we touched that level, went a little bit below. We always had a reaction back up to this 50% retrace, and at best 0.32 retrace to test those previous fib level. It happened here. We had a relief bounce. So this would be the exit opportunity within that drop. And then after that, we lost the 618 level again, went to 786. And, when you go more in the future, you will see that we're going to also come to the 887. So that is the first time that price went from all-time low to all-time high, went back to 618, bounced back, relief bounce to 50 and 32 level. Now, if you take this low here to that high, to that local high here, from 3,186 to 13,970, price went back to where 618, almost to the dollar, and we bounced back up to 38.2 level. Again, all right. Notice that this 50% retrace has been also acting as a support and resistance, but we went back to 38.2. Now, we can do the same exercise here within this consolidation phase. Once price back come to 618, went back to 38.2 and lost it, and we went back to the 786 and 887. So if we do that on this bigger time frame, we know that a few days ago we went test to the 618, and if you have to bounce back, if you have to have a relief rally, a relief bounce for us to maybe exit a little bit of a position if you are overexposed, or rebalance the risk inside your portfolio. If we do bounce back to 50% retrace, I'm looking at least at 36,391, and 38.2 will be 44,000. We have also a gap here at 44,000. So if what happened in the past is going to repeat here currently as we speak, we test first 618, come back. That will be a safe exit at 36,300, and best case scenario for this relief bounce at 44.
Lee, now the crazy thing is when we look at that relief rally, a lot of people's going to flip bullish at that, and this still remember we within the bullish thesis. So the argument is, if that happens, what are we going to do? Regardless, the fact that the bullish thesis is still in play, because we cannot trust one specific thesis. Are we gonna now use this to press down the bullish narrative that we're gonna keep on making to that 200K plus targets that we have, or are we gonna say to?
That's good, because what is the frustration now is maybe people are overexposed, maybe are still 100% in cryptos. Not enough cash. That relief bounce is just in case we're gonna come back and lose at 618 again. Then we can look at sub 20K level, which is the 786 and 887 level, right? So I rather, this is the opportunity basically for us to rebalance the portfolio according to the risk that you wanna take. And best case scenario, let's say we go above to 50K, 56,000, 60,000 all-time high. Price will always come back. They will always try to retrace. So you can always re-enter the market at the price that where you sold it at 44, even best case scenario 53. You will have a lot of more opportunity to buy it back at those price, but then you will be sitting at another position, right? You will have more confirmation that we're gonna make a higher high, come back, a retrace, and buy the support.
Now, the interesting thing is that we have this, guys. So we want to be part of the resistance. We don't want to fall victim of being part of the crowd that kind of trades crypto out of hope that it doesn't go lower, and hope that if it goes, I will have been in dollar by now, because people tend to fall victim of that, thinking that they are smarter than everybody else. And in actual reality, nobody gets out in time. That's just the way these things go. So being part of this, and I think this is the important thing then, if we get in this area, rather say I'm willing to sacrifice probable gains of 12%, or track it if you can by using the simple 23.6 tool that we have. Because as long as it keeps on going, and price will stay above the 23.6. And then the nice thing is, once it's there and you sell into the resistance, be part of it. If all your selling and everybody else's and the whale that bought you selling isn't enough to turn this thing around for a lower, bigger discount, what will they do? Well, wait for the steam to run out and then buy the next area for continuation. So for me, I would rather risk losing some gains than risk losing some money. That's the way that I look about it, and that's the way I'm going to be acting out of this. Remember, investments, long-term holdings, were stuff that we bought from bargain basement prices down there. So all of them are still in good profit. We don't want to be reckless with it, but we don't want to be trading our investments unnecessarily. Don't invest in a trade, meaning hold on it and bargain with yourself whether it's going to work. And don't trade your investment thinking that today I want to get out, tomorrow I'll hold it if I'm wrong. That's the worst thing that you can do to your portfolio. Fibonacci Lee, thanks a lot. So exit strategy in that instance, that's going to be the game plan for now. What are we going to do with Ethereum and Telos and any of the other alts that we're looking at? Because people are still holding in some of these alts. Do we have a minute to quickly have a look at those and see whether they have similar levels for a probable exit liquidity?
Well, do you have a chart?
Yes, I have a chart. We can quickly have a look here.
Sure,
We can bring up Ethereum. Ethereum is something that everybody wants to know about. Now, I've been holding this Adam Eve pattern since forever, but I'm not a pattern trader, and I'm not a pattern trader specialist. So I was just looking at a reason or a high probability. But look at what Ethereum is currently sitting at now. Ethereum is also at your 618 level. There it is in yellow. So if you're stuck in Ethereum, your argument would need to be sell there, because if it goes higher, what will happen? You will have a rejection there. At each fib level, there will be a rejection, and you can buy here for the continuation. That would be the good. And that will then create the first higher high on the weekly for Ethereum, which couldn't be considered bullish. If it doesn't do that, you be part of the resistance and be fine with that, because then you can be part of the support. That's my thesis on Ethereum for now. Do you have anything you want to add there on the screen that I might have missed?
No, nothing.
Okay. So that's Ethereum. Let's have a look at Telos. Because Telos is currently probably one of those that's also, it's in 35 cents. That's below our I think our lowest target was sitting at around this level. I can't remember. I have to go pull up that chart. But if we do the same thing, high to low, saying that this is the area, this is sitting right here at the bottom. So, I mean, we can't even use this analogy with these type of fibs. So what do we do? What do we do with any of these? We look for the 786 and 88, which is that. What's the other one for everybody quickly?
887.
So if you don't have it, it won't necessarily be on default. What you do is you edit your retracement, and you just type in 0.887. And I'm just going to highlight market a light blue for this argument so we can quickly have a look there. Boom. And that's going to be your DC area, your investment area. Now, what Telos did do, and most of the other alts that would have retraced so significantly would have done, is it would have given you an opportunity for a high now. So now what do you want to do? Go test these lows. Tell me you're done falling. Then make a higher high. Make me interested in buying. And then when we're within this range, I start getting into Telos. That's going to be the goal there. Then Near basically took a big punishment. A lot of it is also due to Luna. RSI for me here is an important thing. We've made a lower low, but we've made a low on the RSI. So there's no reason to think that NIA is getting ready to go just yet. There is a high. You guys know about the high now. You can see it there. Come and test these areas at $5 and go make a higher high. Then I will have another look at NIA. Cardano. Let's quickly have a look at Cardano. Cardano at this stage, our love child is not ready to go. Same thing. I love Cardano. I love what they're doing. But the reality is I can't touch it. There's no reason to touch it. The RSI, the fact that it's making lower lows and lower highs, it's not ready to turn. So there can still be more punishment there. There's the 887 level. Cardano went to the 887. So you can't rule it out. 887 does get triggered. So there's 618, just to give you an idea how overextended Cardano was. Because look at how it gapped itself up. So big more punishment. I don't expect it. I would imagine that this is as worst as it's going to get. But my imagination doesn't, create the price movement. We have to wait and see. And then Shiba, this is something interesting. Now, we said this Friday, Lee. Shiba is bringing out a stable coin. They bringing a lot more to crypto than just being a meme coin. So there's some substance behind it. So, we were looking at it as a meme coin, Lee, but maybe we should, retract our opinions on this and give it a little bit more thought. And one thing I want to show you, if you look at this, Lee, maybe you will like to buy a little bit of SHIB.
I bought in the past. I bought in the past. I sold. I took my investment out, and I still have a little bit of Shiba Inu, but these are all profits. So I'm not even looking at the chart anymore.
Well, yes, some good news for people in SHIB. So this is what we're trying to see. If you look at Shiba Inu on the daily, what I'm getting is the RSI is giving me a higher high, and price clearly gave me a lower low on the pivots. If you're unsure about the pivots, flip to the line tool. It's the easiest way for you to just find your eyes on these areas, okay? So there we go. So it's giving me a reason to think that it wants to bottom out. It's localization-wise, it's in a great spot. Look at how this thing performed, Lee. So it's probably sitting at or above the 887. Let's quickly bring it there. It's literally below this. This is a discount if ever there was one. So it's telling me it's overextended. It's telling me that it's warranting a buy. We've got capitulation, high volume at the bottom, which is a good sign. Now I want to see low volume going up. So don't rush into this thing. There's a high. Wait for that high to get broken. Then you come buy a low. That's going to be the way in my game plan forward with any of the other alts. So if you're sitting in an alt that's not doing well, wait for another one to give you a setup that's showing you that there's some positivity and some movement there. I sell the bad alt for the good alt and see what I can make. The risk then remains the same within my portfolio, but this one has a better chance to move than Cardano for that matter. So let's not worry about it. I'll rather move Cardano money into SHIB and go make some gains, because at that stage, Cardano might then have sorted itself out, and I can move that SHIB profit and the Cardano money back into this one to ride that wave. And that would be a responsible way of looking at your trading. Within investment-wise, we've given you the zones, good investment time periods to enter. And I think that's it, Lee. That's all that we wanted to share for today.
Yeah. So, I mean, in a nutshell, on my side, I don't think it's the time to sell anything. I mean, 618 level comes like once every, I don't know how many years, from all-time low to a local high. So it's definitely not the time to sell. It's a time to DCA, ladder in. If it goes below, there's nothing you can do. If it goes in, it goes. At 786, I'm gonna DCA a little bit more. These are the zone that we have to buy and we have to invest for long term. And then if the market, for those who are overexposed and don't have any cash anymore, unfortunately, I wouldn't even suggest right now to sell it at this price, waiting and hoping for a 20K level. I would rather, wait for this relief bounce to come. And if that relief bounce to come, that is the moment to rebalance your portfolio and have a good and decent risk management in place for that.
So with that said, we also want to talk about trading, because now we can start trading a little bit more aggressively, guys, with this relief bounce possibly on the horizon. So we've looked at a few things, and we created this competition for you guys. It's there for you to go and win. So it's on Bybit. There's the link. The link will also be in the description. Go and open a new account using our link. It puts you automatically into the prize pool. If there's only 50 guys sign up, there's a 40% chance you winning some money for taking one trade. Maybe that's a good thing.
Just one point that is important. You said there's a prize pool. The prize pool is only is going to be given to only people who register with CryptoEMC link, but the competition is open to everyone who got the link, basically.
Okay, so if you want to trade with bragging rights with your own account, you can do it, but you won't be eligible for the prize pool. That's basically what you're saying.
Yeah.
Okay, cool. Well, that's that then, guys. Wednesday, we're going to be live trading as usual. Hopefully, then we'll have a market conducive of some nice entries. We're going to be looking at, I don't know, I'm doubtful of looking at some alts, but guys, go and have a look at these exit and liquidity shifting structures. If you're trapped in something, apply these simple tools. Watch the video again, go and apply these simple tools and get yourself out of that sinking ship. There will be rockets passing by. Your job is just to identify it, and we're here to help you along the way. Lee, as always, I want to say thanks, buddy. Is there anything else you want to discuss? We're going to call it a day.
We can call it a day, and let's hope for higher highs and higher lows, and let's get these relief bonds. I mean, if not now, then when? If the bulls is not fighting this 618 level back, then I would only say that they deserve to be smashed and then go to sub 20K.
Last little thing for you guys. Remember this: the stock markets in Bitcoin is best gaining weeks and months. It's normally after its most painful reversals. It's at these extremes where the profit is made. Remember that. So we're in this area. Be wise about it. Don't be foolish. We're in these extreme zones. So everything's going to be extended to the umpteenth. If this thing starts rallying, anybody that's out to revenge trade this market or do anything is going to want to FOMO into this to try and get a little bit of money. That's where we need to be the resistance. And that's it. Lee, you also do the daily rundown, guys. So please go and have a look at Lee's little daily rundown. He breaks Bitcoin down within what's going to happen the next day.
We're doing run up now.
Yeah, it's the run up. Let's be positive. Lee's going to give you the Bitcoin run up. We'll rebrand it pretty soon to the Bitcoin run up, and then go and check that out as well. Education on the channel as well, and more education to come very shortly. And that's it. Let's say goodbye. Cheers, everybody. Lee, thanks for joining in, buddy. Keep hustling, my friend.
Have a nice day. Have a nice day. See you tomorrow.
Where's this exit tile?